As it is time, we will start the financial results briefing of Prestige International Inc. for the fiscal year ended March 2026. First, let me introduce today's attendees. Shinichi Tamagami, Representative Director, Chief Executive Officer, and Group CEO. Naohiro Nishida, Managing Executive Officer and CFO, General Manager of Group Corporate Management Division. These two individuals will be presenting today. The event is scheduled to end at 5:30 p.m. This is an announcement for all Zoom webinar participants. Please refer to the materials available on the IR website of Prestige International. First, Nishida, Managing Executive Officer and CFO, will explain.
Thank you very much for your participation in the financial results briefing of our company today for the fiscal year ended March 2026. Today, I would like to present a summary of our consolidated financial results for the fiscal year ended March 2026, as well as details of our performance by segment and our forecast for the fiscal year ending March 2027, in accordance with the materials at hand. Now we will begin our explanation. Slide 5 is a summary of consolidated results for the fiscal year ended March 2026. Net sales increased year-over-year 11.3%, or 7,191 million yen, to 70,911 million yen, driven by the global business, financial guarantee business, and property business. Operating profit increased despite the expenses for partners related to assistance service in the automotive and property businesses, and an increase in personnel due to business expansion and higher wages. These costs were absorbed by sales growth in the profitable global and financial guarantee businesses. As a result, it amounted to 8,869 million yen, up 11.4% year-over-year, or 908 million yen. Ordinary profit increased 16.1% year-over-year, or 1,355 million yen, to 9,772 million yen, due to an increase in operating profit, foreign exchange gains of 353 million yen, and equity in earnings from affiliates of 194 million yen. Net income attributable to the parent company increased 21.6% year-over-year, or 1,050 million yen, to 5,920 million yen, due to the tax credit for a wage increase incentive system on investments in human capital. Although many of our expenses were affected this year by inflation and rising wages, especially in the automotive business, due to the revision of unit prices paid to tow truck partners and other factors, this was absorbed by the increase in sales in our main businesses, and we achieved record highs in sales and every profit stage of the business. Next is the balance sheet. Regarding assets, cash and deposits increased due to the accumulation of net income. Regarding advances, while advances for medical expenses overseas decreased, advances for property rent guarantees increased. The allowance for doubtful accounts increased by 691 million yen, as the amount on the balance sheet, which is the accumulated amount, although the amount incurred in the current fiscal year decreased from the previous year. In fixed assets, construction in progress related to the BPO center under construction in Katagami, Akita Prefecture, increased by about 3,600 million yen. In addition, goodwill generated from mergers and acquisitions at subsidiary Entrust Inc. increased by 331 million yen. Total assets amounted to 82,244 million yen, up 10,653 million yen from the end of the previous period. Total liabilities increased 7,809 million yen from the end of the previous fiscal year to 29,757 million yen, due to a 6,000 million yen increase in borrowings for BPO center construction costs, a 228 million yen increase in contract liabilities for advance contract fees received from clients, a 309 million yen increase in accrued bonuses for wages, and a 209 million yen increase in income taxes payable. As a result, net assets increased by 2,844 million yen to 52,486 million. This graph compares quarterly sales trends between the current year and the previous years. As you can see, sales have been steadily building up toward Q4 and have exceeded the previous year's results in each quarter. Q4 alone has also reached a record high level, confirming that the upward trend in our business performance is continuing. Next is the quarterly operating profit trend. In H1 of the fiscal year, the automotive business operated under cost-push environment. Thus, Q1 and Q2 of the fiscal year were below the level of the previous year. In H2, however, the effects of the new business start of new client and successful price increase became visible, and from Q3 onward, profit recovered to a level higher than the previous year. The company has achieved a record high profit for the full year. I will now explain the detail of each business. The first is the automotive business. Net sales increased 9.8% year-over-year, or 2,675 million yen, to 29,930 million yen, and operating profit was unchanged from the previous year at 3,449 million yen. In terms of sales, the start of new contract for direct non-life insurance companies' roadside assistance services and integrated contact centers, including roadside assistance services for one of the industry's largest import car manufacturers, which started during the period, as well as price revisions in response to rising prices, contributed to sales. As for operating profit, due to unit price for roadside assistance services partner was raised from July, and dispatch costs increased due to longer distance of towing and increased demand for emergency services due to the extremely hot summer, as well as personnel costs rose due to improvements in employee compensation. Profit level remained below the previous year until the interim period. However, price negotiations which concluded in H2 and the startup of new business has allowed to recover to the same level as the previous year. I would like to make 3 points regarding current issues and initiatives. The first is that automobiles are becoming more sophisticated, making it increasingly difficult to repair them on site and restore them to driving conditions. This has led to an increase in the towing of vehicles to dealers or repair shops, leading to a higher cost. Regarding the second point, we have been promoting price increase to our client companies, but the cost burden on the client side has also been increasing, and it has become difficult for them to absorb as it has been in the past. As for the third point, we are promoting DX using AI, but AI automatic responses are unlikely to lead to customer loyalty, and it is still difficult for AI to provide responses that require complex, sophisticated judgments and hospitality coherence. Clients are also becoming polarized among those who prefer human operations with hospitality and those who seek cost reductions through labor savings. Since these trends are expected to continue, the group will continue to design this boundary between what to let DX do, including AI do, and what to let human do, while striving to both improve quality and efficiency. In addition, as mentioned in the interim period, The number of road service partners in the Tokyo area has been decreasing due to a shortage of labor and business succession issues. We will maintain and expand our service network through the opening of new service centers by the group's subsidiaries specializing in assistance services, investment in vehicles, and enhanced communication with partner companies. Continuing on, the property business. Net sales increased 14% year-over-year, or 1,208 million yen, to 9,860 million yen, and operating profit increased 10.4%, or 75 million yen, to 806 million yen. In the period under review, profitability of Park Assist for coin-operated parking deteriorated due to increased labor costs to maintain quality and the impact of price negotiations not up to date with client companies. The situation was almost break-even, and challenges remain. On the other hand, in the Home Assist business, assistance service for rental properties launched in H2 of the previous fiscal year contributed to annual growth, and together with price reviews and efficiency improvements, the property business as a whole posted an increase in profit. For the fiscal year ending March 2027, we are first reviewing the profitability of Park Assist, which was an issue in the current fiscal year. Progress is being made in price negotiations, and the effects of measures to balance quality and efficiency, such as promoting manned chat communications at overseas offshore locations, are beginning to show promise for improvement. With regard to Home Assist, new home sales have been declining due to soaring real estate prices and materials, making it difficult to obtain profit-earning opportunities through an increase in the number of clients' sales increase. At the same time, market needs for the long and careful use of existing properties have become apparent, and we will work to expand repair and repair services and services that maintain and enhance the value of properties. In addition, although we have been servicing condominiums for sale mainly in the Tokyo metropolitan area as our main customers, as rental property services are expanding on a nationwide scale, we will strengthen our service network by expanding the number of assistance dispatch bases, just as we did with automotive business. Furthermore, the number of users of membership-based services, such as living services for subscribing members of telecommunication carriers, is increasing, and demand for caring over the elderly and children is also becoming apparent. We will expand our services that support the security and convenience of daily life from various angles, including the development of home IoT devices and systems and services for pets. Continuing on, global business. Net sales increased 1,550 million yen, or 17.3% year-over-year, to 10,484 million yen, and operating profit increased 124 million yen, or 10.9% year-over-year, to 1,263 million yen. This is the first time that our global business has surpassed the 10.0 billion yen mark. In the healthcare program, HCP for expatriates, new clients continued to be on board from the previous year, and the number of overseas travel insurance underwriting cases processed continued to increase due to an influx of cases from mega non-life insurers, contributing to the results. In addition, price revisions also progressed, as well as the effect of the yen's depreciation helped the company on higher revenues and profits. For the fiscal year ending March 2027, demand is expected to remain strong and drive revenues, including the start of new clients in the healthcare program, HCP, as in the current fiscal year. On the other hand, the situation remains unpredictable due to some geopolitical risks, such as the situation in the Middle East and ongoing tensions with China. In terms of medium-term trends, the cost of sending expatriates abroad is on an upward trend due to accelerating inflation, a weaker yen, and rising medical costs. In the past, medical care for expatriates was often covered by travel insurance provided by insurance companies. But as insurance premiums are repeatedly revised, companies are reviewing the cost burden. Under such circumstances, an increasing number of companies have decided that it is more economically rational to pay their own medical expenses instead of relying on insurance, and have decided to drop their insurance coverage. Thus, the need for our overseas healthcare services network is growing. In addition, there are requests to expand and improve the quality of our medical services for expatriates in non-developed countries, and we will continue to invest in service quality by expanding our network of medical institutions in Latin America and Southeast Asia through increasing the number of staff stationed at local medical institutions. Continuing on, customer business. Net sales were 6,655 million yen, almost the same level as the previous year. Operating profit increased 30.1% year-over-year, or 240 million yen, to 1,037 million yen. In this business, for the past several years, we have not pursued expansion in scale, but have thoroughly managed the profitability of each project we have been commissioned to undertake, and have been selective of projects to be undertaken. Although there was less growth in terms of sales during the period, the results of efforts to prioritize profit improvement are steadily showing in the growth of operating profit. In the customer segment business, we believe that operation process is the most AI-adaptable DX business area in our group. With the spread of AI, voice bots, and automation of FAQs, it will become easier for anyone to provide the same quality at a lower cost, making it easier to lose the advantage over other competitors, and making it easier for clients to produce in-house, an area of so-called commoditization. At present, AI-related costs are still at a high level, but we expect price competition and lower prices to accelerate in the future. In this environment, we will not pursue expansion of scale, but will focus on profitability. The company aims to generate manpower through labor saving and streamlining by AI and DX, and allocate the resources to other business segments, as well as shift to operations that require more sophisticated human judgment, such as handling claims, preventing churn, and upselling and cross-selling. Continuing on, financial guarantee business. Net sales increased 1,709 million yen, or 16.2% year-over-year, to 12,282 million yen, and operating profit increased 430 million yen, or 18.4% year-over-year, to 2,766 million yen. The property rent guarantee business of Entrust, a group company, showed an increase of more than 10% year-over-year in the number of contracts. In addition, new contracts also remained strong, while new guarantee areas such as medical and elder care expense guarantees also performed well, resulting in increased revenue. Operating profit benefited from higher sales and a decrease in allowance for doubtful accounts and provision for fulfillment of guarantees from the previous fiscal year. For the fiscal year ending March 2027, we will focus on expanding number of users of existing clients while maintaining growth in new and renewal contracts in property rent guarantees. Stabilizing profit margins is another theme we will continue to address. While the rental real estate market is entering a mature phase, we see significant room for growth in the medical and elder care expense guarantees, which are still a blue ocean. In addition to aiming to solve the problem of unpaid accounts receivable and to create a market through guarantee products, we will promote the development and expansion of new products. This includes financial loan guarantees for the purchase of used automobiles, so-called guarantees for the used car market. In addition to these guarantees, lease guarantees, etc. Please refer to the documents at hand for details on the IT and social businesses. I would like to continue by explaining our earnings forecast for the fiscal year ending March 2027. As I mentioned earlier, demand continues to be strong, and we have received many inquiries. On the other hand, while many clients have agreed on price increase over the past few years, there have been some cases where clients have expressed difficulty with the further price increase that have become a routine, leading to prolonged discussions. We believe that the rising price of gasoline, due to the situation in the Middle East, and the high costs associated with the weak yen and inflation, could impact on our business performance. With regard to personnel hiring, we foresee that tough hiring circumstance will continue. We will continue our recruitment activities, particularly in rural areas, and will also focus on minimizing turnover of existing personnel. We plan to establish a flexible, easy-to-work-in environment and further review our wage package. Through the explanation of each business segment, efficiency will be improved through the use of AI, etc. But at this point, there are still gaps to be filled by AI for the service we provide, and it is possible that efficiency improvements through labor savings and DX may eventually have a side effect on our service price through a review of outsourcing fees. From the perspective of so-called CX/UX, there are many users and clients who view mechanized responses negatively, and we are also aware that it is difficult to differentiate ourselves from other companies with mere DX alone. In the short term, the group will continue to review earnings, improve profitability by increasing unit prices, and save labor through DX to generate scarce resources. In the medium to long term, it will be necessary to shift not only to more efficient responses, but also to more sophisticated so-called customer experiences. We will differentiate ourselves through operations that combine DX and hospitality, utilizing the vast amount of data accumulated by the group to improve NPS through appropriate resource allocation based on predictive models and anticipatory responses to end-user requests. Based on these assumptions, our forecasts for the fiscal year ending March 2027 are net sales of 76,000 million yen and operating profit of 9,600 million yen. Sales are expected to be almost in line with the medium-term business plan, while operating profit is expected to fall short of the plan by about 4%, or 400 million yen. Compared to the time when the medium-term business plan was formulated, prices have risen and the yen has weakened significantly, and upward pressure on wages has become stronger, resulting in a continuing trend of high costs. Unfortunately, we expect to fall a little short of our profit plan, due in part to the churn of clients who value cost over quality. Net income is also expected to be the same as in the fiscal year ended March 2026, due to the removal of foreign exchange gain incurred at the end of the period and the impact of the termination of the tax credit for a wage increase incentive system, although operating profit and ordinary profit are expected to increase. Finally, I would like to make one point. Thanks to your support, we are celebrating the 40th anniversary of our founding. It is generally believed that a company enters a period of maturity after 40 years in business. But for us, we have overcome the temporary effects of the pandemic and continued to grow. In this fiscal year, which marks the 40th fiscal year, both net sales and profit at each stage is expected to reach at the record highs. Although we may not expect to reach the profit targets of our medium-term business plan, we continue to mature as a company and will accelerate new initiatives and changes for the next 50 years. I would like to explain our policy on shareholder returns. For the fiscal year ending March 2027, we plan to increase the annual dividend by 2 yen to 28 yen per share. We will also steadily implement shareholder returns totaling approximately 13 billion yen over 3 years, including repurchase of treasury stock, as outlined in our medium-term business plan. The company had indicated that it would raise the dividend payout ratio to around 60% by the second year of the medium-term business plan. However, net income exceeded the plan due to foreign exchange gains and the effect of the tax credit for a wage increase incentive system, resulting in an increase in earnings per share from the planned 41 yen to 46 yen. And as a result, the dividend payout ratio is at 55%, lower than the plan. On the other hand, the total return ratio, including repurchase of treasury stock, has reached 80%, exceeding the target level in terms of total return. There is no change in our policy of aiming for a total shareholder return ratio of at least 70% through the final year of the medium-term business plan, and a total of 13 billion yen through the combination of dividends and repurchase of treasury stock. We will continue to improve ROE and dividend yields, and to make the company an attractive investment, we will work on both expanding earnings and enhancing return measures. Lastly, I would like to talk about the introduction of a shareholder benefit program starting from the fiscal year ending March 2027. Since the group provides services that support its clients from behind the scenes, it is difficult for the group to gain name recognition compared to companies that provide consumer goods. Since this point is also linked to our brand awareness in the stock market, we would like to strengthen our appeal, especially to individual investors, through our shareholder benefit program. It is generally believed that a shareholder benefit program will lead to the expansion of the individual shareholder base and revitalization of market transactions, and from this perspective, we have decided to introduce this program. We appreciate your understanding. That concludes my presentation.
Finally, Mr. Shinichi Tamagami, Representative Director, Chief Executive Officer, and Group CEO, would like to address the participants, including a general summary.
This is Tamagami, Prestige International. Thank you very much for your participation today. This fiscal year is the final year of our midterm business plan. After the completion of the first and second year of this fiscal year, I believe that we have been able to improve our group's muscularity over the past 2 years through our post-pandemic initiatives and business expansion. However, when the pandemic occurred, we expanded sales and profits through various customer businesses and other businesses that we would not have focused on. However, when the pandemic terminated and those businesses were no longer in existence, I believe that we have been able to establish sales and profits in our core business segments over the past 1 to 2 years. In this sense, we as a group will be required to make more proactive investments in the businesses and services that we should provide, in terms of industry segment, clients, and business, and in order to add value, increase market share, and thoroughly differentiate ourselves from our competitors. In such efforts, we believe that it will become increasingly necessary to build a muscular system. In this context, as a group, we are constantly being asked on the development in customer service through AI. It is said on TV that various services by AI can provide quick and accurate services to customers. However, as Nishida explained earlier, our company's services are based on the areas that will have least impact by AI and strengthening relationships with customers in such areas. The group needs to have a solid strategy for providing added value and receiving appropriate compensation. In the third year of our medium-term business plan, we hope to make these points clearer and more prudent, and to make sure that the group is also making full use of its subsidiaries. The companies in our group, including Entrust, as well as Premier Aid, a company that provides another road service system from this April with capital participation from Tokyo Marine, are highly evaluated. As for Premier Aid, it provides services that include very advanced safety measures, such as assistance at accident and dispatch road service response based on visuals obtained from the driver's onboard camera record. We believe it is very important to establish a group subsidiary company or a new operating company to develop, operate, and enhance the mobility of these businesses, rather than developing in a large parent company organization. Therefore, we will continue to carefully assess these points and make bold investments where necessary. We are planning to make this an important position for the group. Another point that we are often asked is that the recruitment situation in Japan is very difficult, especially in Akita and Yamagata, where we have a large base of operations. But, again, our strength is our low turnover rate. Employees with long-term experience in the community are available by having customer hospitality. This is a very big advantage. This is able to achieve from the point that the area where we have our operations has low job mobility and seldom switch job. From that point of view, as Nishida mentioned earlier, in our 40-year history, we have clients who have been with us for 20, 30, or even more years. This is our very important value. I think that by having long-term relationships with these clients, we are able to work together to develop what we can do and what we should do, and I believe this has led to the growth of our business. If we talk about scale of our clients one at a time, some of our clients have scale with 300 or 400 operators, some with 200 or 300 operators. We have 10 or 20 very large-scaled clients, even though it is not hundreds. Thanks to such clients, I believe that we are able to secure stable sales and profits for our overall business. In any case, this year, the final year of our medium-term business plan, will be the culmination of the past 3 years as a group, and we will continue to make investments, improvements, and reforms to prepare for the next 3 years of new growth, including business upgrading and differentiation. Thank you.
We will now move to the question and answer session. Now we would like to take questions from the participants. Please note that we may not be able to answer all questions due to time constraints. Now, if anyone in the audience has any questions, please raise your hand.
I know that your company is a wonderful company that cares about its customers on-site employees, and the local and regional people, and that it is also growing. You mentioned earlier that you are aiming for growth in businesses that you should be in, and I would like to ask you about your medium to long-term vision for each of the segments on page 20, in terms of where you will be focusing your efforts in the future. One point I was wondering about was the situation where customer business had a slight decrease in revenue for the fiscal year ended March 2026, and the plan a year ago was for perhaps a 7% increase in revenue for the fiscal year ended March 2026. Although there is a selection of customers, it is made on the assumption that you will not grow this area much this year. I would like to hear your medium and long-term plans for the customer contact center business and what you plan to do with these and other resources.
As you mentioned about the customer business, as you already know, the customer business has a profit structure in which prices are calculated based on the amount of labor input. So in terms of increasing the top line or increasing profits, I think it is becoming more and more difficult these days. As I mentioned earlier, this is a field where AI and DX can easily produce results. But this also means that there is a growing trend among clients to use AI and DX in-house, the company for processes that used to be outsourced. Therefore, while we will, of course, continue to improve efficiency in this area, I think it is necessary, first of all, to change the business scheme to one that incorporates membership termination prevention, or shift from the volume of resource-based fee to a fixed fee plus success rate fee type of transaction. However, it is difficult to achieve immediate results in this area, so the plan is relatively conservative in terms of earnings, including sales. As I mentioned earlier, there are many call centers that charge a certain amount for labor resource input. One of the things we are trying to do is to change this to a pay-for-performance system, such as a fee per response. For example, in the case of roadside services, we handle about 1 million dispatches a year, so we are currently studying how to utilize this data and what effect this will have on the next medium-term business plan.
I think that switching to a pay-for-performance-based system, which you just mentioned, would probably cause some internal tension. And I understand that it is easy to do and promote because of your company's low turnover rate.
That's true, but there are some cases in which the fee is based on performance. For example, a fee is charged for each call received, but by implementing a fee structure in which a fee is charged for each call generated, rather than a fee for the amount of resource dedicated, sales may decrease in the future. However, we need to include in the remuneration system a form that will increase profits from the current level. And while of course aiming for the top line, rather than just aiming for the top line, AI and DX are not only about improving efficiency, but may also lead to less service outsourcing fees because they do not require personnel expenses. Therefore, the issue is what kind of added value and results should be incorporated into the remuneration system.
I would like to ask one more question. If I open the 11th, 12th, 13th, and 14th pages of the document, I think the profit margins of property and global businesses have been on an improving trend for the past 2 to 3 years. Pages 13 and 14 on the right. In the past 2 years, automotive's profit margin has declined as payments to tow truck partners inevitably increased, but this fiscal year, the profit margin is expected to increase by about 0.2 percentage points. On the other hand, you mentioned that there are customers who are reluctant to accept the price increase of orders. Will the profit margin recover in the future? We would like to know what kind of services you are currently feeling confidence in order to get people to agree to a price increase, especially in the automotive industry.
As I explained earlier, there are clients who focus on customer satisfaction from the customer's perspective, and there are also clients who simply focus on cost. It is a fact that some companies have left us over the past few years because they could not absorb the price increase. This has had a slight impact on the top line and earnings, and profits were lower than the previous year in Q1 and Q2 of the last fiscal year. For other customers, we negotiate with them on price, and this leads to profit increase. In the future, there will be things like roadside assistance, which is just a matter of arranging. From the customer's perspective, NPS data shows that the shorter the time from a call is placed to the time a service staff member arrives, the higher the level of customer satisfaction. This would not only improve efficiency, but also enable our tow truck partners, including our subsidiaries, to quickly grasp the content and get to the site as quickly as possible. And how the operator, who is the first contact, understands the situation of the customer's problem. If we do not improve the quality of each of these processes and link them together, it will be difficult to shorten the time required for the entire process. We understand that customer satisfaction cannot be improved unless we improve the quality of the entire process, from upstream to downstream, one by one. Conversely, if we can increase this total value chain, the client will be glad they outsourced it to Prestige International and will be more satisfied with the service, so we must increase this added value. As I mentioned earlier, if we simply mechanize the whole process, such as calls that are answered by an AI, the tendency has emerged that the customer will not be fully satisfied. I would like to brush up on these areas to improve customer satisfaction, which in turn will improve client satisfaction.
Thank you for your question. This concludes the financial result briefing of Prestige International Inc. for the fiscal year ended March 2026. Thank you very much for your participation today.